Hello, everybody. Good day, and welcome to Rich Dad Poor Dad webinar and our mastermind number 70. It's February now. It's a new month. It's February 5th, 2024. Wishing you a great month and a great rest of the year. And today on our agenda, we have a couple different things. But main things today are that one we have on our agenda. Let me make this bigger. So let's see now what we have coming up. Mastermind number 70, February 5, 2024. We continue in our series of Rich Dad, Poor Dad, Chapter 7, Overcoming Obstacles. We've been slowly making our way through this book, Rich Dad, Poor Dad, and now we're at the point of overcoming obstacles. What exactly does that entail in the journey of entrepreneurship and or when it comes on to investing or achieving whatever it is that may be? Then with regards to investing, we have real estate education and news. We'll go over what's going on in the market, news for the past 5 days, as well as a bit of education as to what exactly is knob and tube wiring. I remember the first time I heard about that thing, I didn't know what on earth it was. But over time, I learned exactly what it was and why it was important and how much money it would actually cost us to acquire a building that had that kind of wiring. Then we're from a cryptocurrency standpoint, the opposite end of the spectrum with investing. Real estate is like here, and then cryptocurrency is like there. So we're going to be going over what exactly is KYC, know your customer, and we'll be going over a bit of the news and updates with regards to that. As a disclaimer, the content here is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. I'm not a licensed financial advisor, not a CPA, and definitely not a lawyer. Love lawyers, however. Please consult a licensed professional before making any decision. There are risks associated with investing in securities, investing in stocks, bonds, exchange traded funds, mutual funds, and money markets involves risk of loss. This meeting was actually inspired by this book, Think and Grow Rich, written by Napoleon Hill. If you haven't read it, strongly suggest that you take a read if you're looking at achieving certain things in your life. It may help you on your journey. And so 3 years ago, I decided to take massive action on what exactly the concept of this book was teaching as I was networking with people who had the results I was looking for. And this seemed to be a common kind of thing, common kind of novel book in terms of them recommending it. So on this page, it talks about you will read this book, will get the most out of it by putting into practice the mastermind principle described. This you can do as others are doing so successfully by forming a study club consisting of any desired number of people who are friendly and harmonious. The club should have a meeting at regular periods as often as once each week. The procedure should consist of reading one chapter of the book at each meeting, after which the contents of the chapter should be freely discussed by all members. Each member should make notes, putting down all ideas of their own, inspired by this discussion. Each member should carefully read and analyze each chapter several days prior to its open reading and joint discussion in the club. The reading at the club should be done by someone who reads well and understands how to put color and feeling into the lines. By following this plan, every reader will get from its pages not only the sum total of the best knowledge organized from the experiences of hundreds of successful people, but more importantly by far, you will actually tap new sources of knowledge in your own mind as well as acquire knowledge of priceless value from every other person present. Now, if you follow this plan persistently, you will be almost certain to uncover and appropriate the secret formula by which Andrew Carnegie acquired his huge fortune as referred to in the author's introduction. So that's really what inspired these meetings, and they have been fantastic. I met some really awesome people that have logged on here, masterminded with a lot of really great people in different industries. And so that's exactly how we came about to be where we are right now. So let's jump in the first part of our mastermind. So before we're actually going over Think and Grow Rich, we went through all of that previously, and now we're on to the book Rich Dad, Poor Dad. What the rich teach their kids about money that the poor and the middle class do not. Written by Mr. Robert Kiyosaki. And we've been going through slowly and steadily. Now we're on chapter 7. So far, we have gone over Chapter 1, Lesson 1, The Rich Do Not Work for Money. Number 2, Why Teach Financial Literacy. Number 3, Mind Your Own Business, The History of Taxes and the Power of Corporations. Lesson 5, How the Rich Invent Money. Lesson 6, Work to Learn, Do Not Work for Money. And Chapter 7, Overcoming Obstacles. And so my name is Hanif Brown, and I am excited to share what exactly this chapter is all about here with you. 3 years ago, I decided to take massive action on a lot of different things. Personally, I'm born and grown in Jamaica, moved to Canada about 6 years ago or so, and my definite chief aim entails a bit of different things, but we'll get to know each other a little bit more. So we're on page 129. And let's see where we stopped the last time. So on overcoming obstacles, a bit of going over briefly what is here in terms of what we've been going over so far. The primary difference between a rich person and a poor person is how they manage fear. We started out by talking about there are 5 main reasons why financially literate people may still not develop abundant asset columns that could produce a large cash flow. The 5 reasons, namely fear, cynicism, laziness, bad habits, and arrogance. The first part talked about overcoming fear, as that's a normal thing that most people, if you're on earth, there's probably something that you fear, or at some point in your life, you've had some amount of fear. And so we talked about overcoming that, how failure inspires winners, failure defeats losers. And so as you go through this kind of webinar is not exactly for everybody. It's for you if it is that you're looking at improving your life in a different kind of way. It may be financially, maybe you want a little bit more time freedom, locational freedom. Maybe you just want to make a little bit more money. Maybe you just want to make ends meet because things are a bit difficult now. So as you go through, you'll maybe find something in terms of some kind of wisdom, apply it in your life in some kind of practical way. And so you're able to take away something from this. Or maybe you're an entrepreneur and you can at scaling your business. Kiyosaki has built multiple businesses and he does pretty well. And so we may look at it and say, he's somebody who we can look at in terms of learning different things from. So let's see where we stopped. I don't think we finished this chapter last time. Okay, so it's not, I'm getting started. Okay, yeah, I know where we are. So we're starting overcoming cynicism, I believe, overcoming laziness. Here we go. No, not Colonel Sanders. We're on overcoming cynicism. Here we go. So we're on overcoming cynicism. We started it last time, but I'll go ahead and continue. So we're on page 134 if you're in the book. The sky is falling, the sky is falling. Most of us know the story of Chicken Little who ran around warning the barnyard of impending doom. We all know people who are that way. There's a Chicken Little inside each of us. As I stated earlier, the cynic is really a little chicken. We all get a little chicken when fear and doubt cloud our thoughts. All of us have doubts. I'm not smart, I'm not good enough, so-and-so is better than me. Our doubts often paralyze us. We play the what if game. What if the economy crashes right after I invest? What if I lose control and I can't pay the money back? What if things don't go as I planned? Or we have friends or loved ones who will remind us of our shortcomings. They often say, what makes you think you can do that? If it's such a good idea, how come someone else hasn't done it? That will never work. You don't know what you're talking about. These words of doubt often get so loud we can't sleep. We fail to move forward. A horrible feeling builds in our stomach. Sometimes we can't sleep. We fail to move forward, so we stay with that which is safe. And opportunities pass us by. We watch life passing by as we sit immobilized with a cold knot in our body. We've all felt this at one time in our lives, some more than others. Peter Lynch of Fidelity Magellan Mutual Fund fame refers to warnings about the sky is falling as noise, and we all hear it. Noise is either created inside our heads or comes from outside, often from friends, family, co-workers, and the media. Lynch recalls the time during the 1950s when the threat of nuclear war was so prevalent in the news that people began building fallout shelters and storing food and water. If they had invested that money wisely in the market, instead of building a fallout shelter, they'd probably be financially independent today. When violence breaks out in a city, gun sales go up all over the country. A person dies from rare hamburger meat in the state of Washington, and the Arizona Health Department orders restaurants to have all beef cooked well done. A drug company runs a TV commercial in February showing people catching the flu. Colds go up as well as sales of cold medicine. Most people are poor because when it comes to investing, the world is filled with chicken littles running around yelling, the sky is falling. The sky is falling. And chicken littles are effective because every one of us is a little chicken. It often takes great courage to not let rumors and talk of doom and gloom affect your doubts and fears. But a savvy investor knows that the seemingly worst of times is actually the best of times to make money. When everyone else is too afraid to act, they pull the trigger and they're rewarded. Some time ago, a friend named Richard came from Boston to visit Kim and me in Phoenix. He was impressed with what we had done through stocks and real estate. The Phoenix real estate prices were depressed. We spent 2 days showing him what we thought were excellent opportunities for cash flow and capital appreciation. Kim and I are not real estate agents. We're strictly investors. After identifying a unit in a resort community, we called an agent who sold it to him that afternoon. The price was a mere $42,000 for a two-bedroom townhome. Similar units were going for $65,000. He had found a bargain. Excited, he bought it and returned to Boston. 2 weeks later, the agent called to say that our friend had backed out. I called immediately to find out why. All he said was that he talked to his neighbor and his neighbor told him it was a bad deal. He was paying too much. I asked Richard if his neighbor was an investor. Richard said he was not. When I asked why he listened to him, Richard got defensive and simply said he wanted to keep looking. The real estate market in Phoenix turned, and a few years later, that little unit was renting for $1,000 a month, $2,500 in the peak winter months. The unit was worth $95,000. All Richard had to put down was $5,000, and he would have had a start at getting out of the rat race. Today, he still has done nothing. Richard's backing out did not surprise me. It's called buyer's remorse, and it affects all of us. The little chicken won, and the chance at freedom was lost. In another example, I hold a small portion of my assets in tax lien certificates instead of CDs. I earn 16% per year on my money, which certainly beats the interest rates banks offer on CDs. The certificates are secured by real estate and enforced by state law, which is also better than most banks. The formula they're bought on makes them safe. They just lack liquidity. So I look at them as 2 to 7 year CDs. Almost every time I tell someone that I hold my money this way, especially if they have money in CDs, they will tell me it's risky. They tell me why I shouldn't do it. When I ask them where they get their information, they say from a friend or an investment magazine. They've never done it, and they're telling someone who's doing it why they shouldn't. The lowest yield I look for is 16%, but people who are filled with doubt are willing to accept a far lower return. Doubt is expensive. Now, key story there in terms of talking about Robert and his wife Kim when they were talking with Richard. He got a deal. Those townhomes were actually going for 65, going for what is it, 65,000. He got it 45. He got it for $45,000. That's more than $20,000 below the market value of what those townhomes were selling for. Oh, Richard was excited. He was ready to take action. And then he talked to his neighbor. There's a key concept that goes around. Who do you listen to? Are you listening to people who are doing exactly what it is that you would like to be doing? People who are living the kind of lifestyle that you would like to be living. People who have the things that you are looking for. Kiyosaki owned a lot of real estate. Now, Richard got advice from him. That's who you want to get advice from, right? Somebody who's a successful real estate investor, a successful real estate investor. But then Richard went and talked to his neighbor. His neighbor said it was a bad deal. You know, how many times have people found themselves in a situation where they take advice from the wrong kinds of people? And so you pay attention to who do you listen to. And he goes into talk about CDs and how exactly he invests in them. And check that out for yourself, particularly if you're in the United States. as Kiyosaki has some of his money in there. I personally have not looked at that in terms of the US, but what he looks for a minimum percentage, which is 16, and the lowest yield, that's the lowest yield that he really looks for. You know, to some people, hearing 16% is like, nope, that's not possible. Well, it's happening. It's 16% per year, right? There are things that pay more than that as well, right? But that is the lowest Kiyosaki really looks for. And so he knew what he was looking for. Many people, they go into investing not understanding what exactly they are looking for. You need to understand what you're looking for, understanding different markets, spend time and understand them, network with the right kinds of people, as doubt is expensive. You will doubt because you do not understand and you don't know. But once it is that you spend some time understanding, it will take you some time, it will take some education, it'll take some learning. But hey, you know, you'll get there. So don't be too hard on yourself if you find yourself in that situation, as you can learn and you already have a willingness. My point is that it's those doubts and cynicism that keep most people poor and playing it safe. The real world is simply waiting for you to get rich. Only a person's doubts keep them poor. As I said, getting out of the rat race is technically easy. It doesn't take much education, but those doubts are cripplers for most people. Let me just have some water. Cynics never win, said Rich Dad. Unchecked doubt and fear creates a cynic. Cynics criticize and winners analyze was another of his favorite sayings. Rich Dad explained that criticism blinded while analysis opened eyes. Analysis allowed winners to see that critics were blind and to see opportunities that everyone else missed. And finding what people miss is key to any success. Real estate is a powerful investment tool for anyone seeking financial independence or freedom. It is a unique investment tool. Yet, every time I mention real estate as a vehicle, I often hear, I don't want to fix toilets. That's what Peter Lynch calls noise. That's what my rich dad would say is the cynic talking. Someone who criticizes and does not analyze. Someone who lets their doubts and fears close their mind instead of open their eyes. So when someone says, I don't want to fix toilets, I want to fire back. What makes you think I want to? They're saying a toilet is more important than what they want. I talk about freedom from the rat race, and they focus on toilets. That's the thought pattern that keeps most people poor. They criticize instead of analyze. I don't once hold the key to your success, Rich Dad would say, because I too do not want to fix toilets. I shop hard for a property manager who does fix toilets. And by finding a great property manager who runs houses or apartments, well, my cash flow goes up. But more importantly, a great property manager allows me to buy a lot more real estate since I don't have to fix toilets. A great property manager is key to success in real estate. Finding a good manager is more important to me than the real estate. A great property manager often hears of great deals before real estate agents do, which makes them even more valuable. That's what Rich Dad meant by I don't want. Hold the key to your success, because I do not fix toilets either. I figured out how to buy more real estate and expedite my getting out of the rat race. The people who continue to say, I don't want to fix toilets, often deny themselves the use of this powerful investment vehicle. Toilets are more important than their freedom. And so, key example there, real estate as an investment vehicle proven over time, as one can see. And if you haven't learned that, then you've talked to enough people who have made a lot of money, and you realize that in a lot of cases, and majority of cases, you'll find that real estate is some part of that, right? There are the advantages and more, and we'll go a bit more into that in terms of the real estate segment. But the key lesson here is that what exactly is it do you want most? Do you want freedom? Do you want exactly what investments bring? Or are you focusing on, I don't want to fix toilets? You can't want both things, You want to do this, but this, but this, but that. You're being a cynic in that way, and that's exactly what he's talking about. And so, okay, you don't want to fix toilets, great. Neither do I. And that's where it is that you feel a need, you will find somebody who is willing to do what it is that you're looking at doing. There are people who do not want to acquire real estate. They prefer to be property managers, right? There are people who prefer to do that. Not that they, wake up and like, I'm so excited to fix toilets, but hey, they know what? Being a real estate investor, you have to deal with a lot of people and a lot of things. Not everybody wants to do that. Some people, they're okay. They just want to manage properties. And they're cool with that, right? They maybe like the stability. That's what they're really good at, and they want to focus on their niche. Not everybody has the appetite to take on risk. And so you realize that in your what's called your power team, having a great property manager is key. As an example, that's one person in the power team. That way you can focus on what exactly is going to help you to expand and buy more properties, which is more deals and more money. Right? That way you're not focused on micromanaging what exactly is going on in each of your buildings. As an example, you want to focus on the high value tasks that you're going to be doing in terms of scaling your portfolio. In the stock market, I often hear people say, I don't want to lose money. Well, what makes them think I or anyone else likes losing money? They don't make money because they choose to not lose money. Instead of analyzing, they close their minds to another powerful investment vehicle, the stock market. I was riding with a friend past our neighborhood gas station. He looked up and saw that the price of gas was going up and thus the price of oil. My friend is worry wart or a chicken little. To him, the sky is always going to fall, and it usually does on him. When we got home, he showed me all the stats as to why the price of oil was going to go up over the next few years. Stats I had never seen before, even though I already own substantial shares of an existing oil company. Key difference there. With that information, I immediately began looking for and found a new, undervalued oil company that was about to find some oil deposits. My broker was excited about this new company, and I bought 15,000 shares for 65 cents per share. 3 months later, the same friend and I drove by the gas station, and sure enough, the price of per gallon had gone up nearly 15% in 3 months. That's a lot. Again, the chicken little worried and complained. I smiled because a month earlier, that little oil company hit oil and those 50,000 shares went up to more than $3 per share since he had first given me the tip. And the price of gas will continue to go up if what my friend says is true. That's crazy. If most people understood how a stock worked in a stock market investing, there would be more people investing in to win instead of investing not to lose. A stop is simply a computer command that sells your stock automatically if the price begins to drop. In Forex trading, you call that a stop loss, helping to minimize your losses and maximize some gains. It's a great tool for those who are terrified of losing. So whenever I hear people focusing on their I don't wants rather than what they rather than what they do want, I know the noise in their head must be loud. Chicken Little has taken over their brain and is yelling, the sky is falling. Scroll, scroll, scroll. The sky is falling and toilets are breaking. So they avoid their don't wants, but they pay a huge price. They have never get they may never get what they want in life. Instead of analyzing, their inner chicken little closes their mind. Rich Dad gave me a way of looking at Chicken Little. Just do what Colonel Sanders did. At the age of 66, he lost his business and began to live on his Social Security check. It wasn't enough. He went around the country selling his recipe for fried chicken. He was turned down 1,009 times before someone said yes. Thank God, because I love KFC. Well, in context, especially barbecue chicken. And he went on to become a multi-millionaire at an age when most people are quitting. He was a brave and tenacious man, Rich Dad said of Harlan Sanders. So when you're in doubt and feeling a little afraid, just do what Colonel Sanders did to his little chicken. He fried it. Good one, Kiyosaki. That was kind of funny. So he wraps up talking about Colonel Sanders and exactly how his story. Sanders wasn't a cynic. No, this guy was 66. 66. 66. most people are looking at, okay, yeah, it's done, you lose a whole business at 66. That's a lot. And I actually didn't even know that this was a story of KFC until some time ago, right? And when I started understanding how exactly it happened, and where I realized that, wow, there are a lot of lessons to take from this, right? And similar to how Kiyosaki got he in terms of how he shared that when he bought these shares in this oil company. So his friend was going off, oil prices are gonna go, oil prices are gonna go up. And what? Okay, great. What are you doing about it? Yeah, sure, they're going up. You know what? He went and did. He actually took the tip from the guy, went and found an undervalued oil company, and he bought those shares 65 cents per share. And how much did it go up to? 3 cents per share. You're not even looking at 100% ROI. You're looking at 200, 300 plus percent ROI. Now, what exactly did each of them do with the information? And so that's where you look at and you realize that, okay, there's a chicken little, there's danger, but Kiyosaki saw an opportunity and he took action on it. Now, he had the funds to go ahead and deposit, whether he had them or not, or wherever he got them from. He made some smart decisions in terms of doing that. Now, who do we want to be? Do we want to be the person looking at oil prices every day and, worrying, or, oil prices going up, inflation, housing markets inflated in, interest rates are up? Or will you see an opportunity, get creative, and make some money if that's what it is that you're looking at? It may not be making some money. It may be an opportunity that you're able to maybe innovate yourself in some way of doing something that you haven't done before. Maybe you yourself have to adjust. You may have to change in terms of how you approach certain things, right? Maybe you yourself are a cynic. Look, it happens to everybody. There's nobody that's immune to this happening. And so a lot of what this book goes over in terms of talking with different business partners and mentors, where I spent an extended amount of time learning from a lot of people who had the results that I was looking for. And a common theme that I realized is that they were action takers. They weren't cynics. They shared in terms of their losses and they shared their wins. You realize that they did lose, right? But in terms of how much they won, it outweighed the amount of times it is that they lost. It's just like trading when he was talking about a stop. In Forex trading, you have what's called a stop loss. If you're not familiar with what exactly that is, simply put, you put in a trade, you wonder, okay, how do I make sure I don't lose all of my money? You take profit isn't going to hit, then and you realize that, okay, the trade is going to be a losing trade, you can minimize your loss. From your own standpoint, you can actually have stop losses as it is that you are doing your own investing. And what that may look like is actually balancing what exactly it is that you're doing, not over leveraging, not investing more than you are willing to lose. And so that's where we'll stop in terms of overcoming cynicism. And we will continue with overcoming laziness. Busy people are often the most lazy. Mm, interesting start. So we'll pause there for now, and we're going to jump into the other part where we're going to go into what exactly we're talking about, particularly with real estate here. So real estate, we're going to be going over what exactly is knob and tube wiring, right? A couple articles here talking about what exactly that is. I remember the first time I was looking at a building and somebody was saying to me, well, it has knob and tube wiring. We're doing some in the due diligence phase. And we realized that it had knob and tube wiring. So what is this? Why is it important? And why on earth am I talking about wiring? And I'm not an electrician. I'm not an electrician, people. So let's go. Pick this. Yeah, this is the one I wanted to share. Becoming the owner of an older heritage style home can be thrilling, but you'll also incredibly challenging. If your house was built prior to 1950, you'll need to consider the type of wiring the home has. For instance, copper, aluminum, or knob and tube, frequently called KNT. If it's an older house and it's never been completely rewired, it could have knob and tube wiring. If this is the case, it's quite likely you'll have a problem when you begin shopping around to get house insurance. Just because a home has KNT wiring, it doesn't mean the house is in imminent danger of burning down. If the wiring has been well maintained, has it been used as a clothesline in the basement, it may just be fine. So what exactly is it? Without going into all the full details, you can already see that it's one older wiring, right? And it was very common in homes that were built before 1950. So common type of wiring, but what? We're always innovating. It's no longer what exactly people are looking for, right? We've innovated to new systems in terms of wiring and consult an electrician in terms of what that could look like. So when you're buying a building, and this is where it comes in that acquiring real estate is a lot more than income and expenses. There's a lot more to it than the numbers. That's one part of it, right? But when you go ahead and you do your due diligence and you realize that it has knob and tube wiring, you realize that it's way older. And so you're seeing where three things that become a situation here. One, you're looking at an older building. Two, you're looking at where when you're getting home insurance, it's gonna probably be, well, not probably, it is gonna be a problem. Why? Because insurance is insurance business. The wiring is older, so chances are there are probably gonna be problems with it. So you're looking at higher insurance, right? And later on, it goes on to talk about the dangers that actually could go wrong with here with knob and tube wiring. So insulation over the wiring, excess use, and things in terms of alterations. So, and you're looking at things in terms of damage there as well. So without going through all the specifics, you're seeing where it is that it could be dangerous. You know, it could cause problems in terms of you could have a fire, right? And you're seeing where things are become a problem in terms of insurance. So when you're acquiring a building, if it has knob and tube wiring, it's not that it's illegal. It's not illegal, but you're seeing where it is that you may have to replace this knob and tube wiring. You want to consult an electrician if it is that you're looking at acquiring a home. You know, if it makes sense, it makes sense. You may need to update the wiring, consult an electrician on that, what exactly it may be, depending on the size of the building, how well the wires have been maintained. You're going to see where it is that you're going to need to replace that. That's something that just with the naked eye, you just don't know. And again, that's where your power team comes in. You don't need to go and learn and fully understand how exactly this works unless you really want to. But see, right here, they have it here. They have the education and they have here, get a quote. Just as an example, I personally never use this. It's just, you know, a site online. And you'll find the similar information in many other sites. So, you know, consider that when it is that you're acquiring a property. So it affects insurance. So replacing it may be a thing. And you hire a licensed professional in terms of doing that. It may be a bit expensive, but hey, you know, you're acquiring a building. You want to make sure it is that you're doing the right things by the building, as that's your responsibility. So that's in terms of education for knob and tube wiring for K. So last week we went through a joint venture agreement. So in K, we talked about knob and tube wiring. Now we're on to news in terms of real estate. A review of the past week. We're seeing where Canadian GDP may delay rate cuts and record unsold condos. Is that so? Toronto real estate developers have never had more unsold condos. Unsold condos are taking a lot of stuff out. Actually, today I was in a conversation with somebody who was in that biz and lots of different problems there. Canadian mortgage credit experience, and he was actually developing a solution. So that's great. Canadian mortgage credit experiences slowest growth since 2001. Canada's GDP shows robust growth, potentially delaying rate cuts by BMO. Well, that's good. Some good news. Canadian real estate markets to see rising sales but lower prices. RBC is saying. So these are the top banks here talking. Vancouver laundering model that inflated home prices moves to Toronto. This week's top stories Canada already. No, this was from last week. So let's see here. Which one of the articles we choose to go over? Yeah, let's talk about Toronto real estate developers have never had more unsold condos. So this isn't exactly my area of expertise when it comes on to condos and more. If you come to me and we're talking about, buying condos and more, there are people that's their specialization. We specialize in acquiring multi-unit buildings. Condos, yeah, it's particularly in Toronto, not so much. I wouldn't look at that right now. But there are people that is their specialty, and there are people that are in this kind of business. That's not exactly my niche market. And not even record population growth is able to help new condo sales across Greater Toronto. A report from development research firm Urbanation shows new condo sales plummeted in 2023. It was the worst year for sales since the Great Recession, but that's not all. The rush to build has left developers with the most unsold new condo inventory ever. Wow, that's tough on developers. New condo sales had one of the worst years on record. Developers sold just 12,776 units, 716 units in all of 2023, down 41% from the previous year and 58% from a year before that. So almost a 50% drop year on year. The fast-growing Greater Toronto region hasn't seen this few new condo sales since 2008. Since 2008. That's not a good thing that you want to see. The city's continued flight to the suburbs helped lessen the blow for the 905 region. And the reason why I was emphasizing 2008 is that that's when the market crash happened, subprime mortgages and more. The city's continued flight to the suburbs helped lessen the blow for the 905 region. City of Toronto represented 6,498 units out of the last year's total, a decline of 48% for the region. Meanwhile, the 905 region's 6218 remaining sales was a drop of 34% from a year before. A lack of sales immediately following a building boom has resulted in swelling inventories. So you're seeing where it is that there's this excess inventory and not a lot of people wanting to buy it. Naturally, that will force prices to go down. Developers were sitting on a record 22,477 in Q4 of 2023, the most ever recorded in the region. It works out to 21.2 months of supply, which the firm estimates is twice as high as needed for a balanced market. That's code for it's a buyer's market, when prices tend to fall unless a sudden rush moves in. However, lower prices mean less incentive to build, and that's exactly what we are seeing. Despite politicians going on cross-country tours to helicopter money to build more. This is helicopter money. It didn't translate into any more units. The number of newly launched units fell 24% to 19,261 in GTA, but 13% below the 10-year average. Sad trombone noise. Sad trombone noise. A drop is typically seen after a low rate boom, since the additional sales are pulled forward demand. Purchases that were going to be made later but accelerated due to cheap financing. However, it may surprise many to see when the population is rising at such a breakneck speed, along with policymakers throwing every incentive they can think of to motivate building. So this is a problem, people, right? Because the government is here saying that here are all these incentives here to build and build and build, yet, and there's population growth. So you're seeing where it is that, longer amortizations, lower interest rates in certain situations, if it is that you are going to be building. And so they're making things a bit more favorable over time in terms of developers incentivizing them to build. But what? You're seeing where it is that there are a lot of unsold condos. Now, granted, a lot of the things just came into effect and it takes time for it to work its way through the markets and more. But this is not looking good for developers. You probably have a lot of really angry people because it's not a money. It's not developers aren't making money in this situation, and they're the people who are really building housing in Canada. So if you're out there and this is happening to you, I'm really sorry to hear that. That's not a good situation, but hopefully things in the future will be better. So that's where we'll pause there from a real estate standpoint. I'm not going to go over another article. We can kind of see the trend. Not a lot of change in terms of over the past, 7 days or so in terms of these articles, particularly here. Obviously, there are more things. I will move on to Cryptocurrency in terms of education, KYC. What exactly is KYC? Is it somebody's name? Is it some other thing for KFC? Some new chicken joint? No, KYC stands for Know Your Customer. These procedures are employed by crypto platforms to verify the identity of their users. Normally, here's what you need to provide for KYC. So the objective of KYC guidelines to prevent financial institutions and crypto exchanges from being used intentionally or unintentionally by criminal elements for money laundering and other illegal activities. KYC helps crypto platforms to establish a user's identity, usually by requiring identifying information, for example, your full legal name or a government-issued ID, like a passport, driver's license, or other similar forms of identification. So that's what KYC is. If you're using a centralized exchange, then you'll find that you likely will have to KYC unless you're using some kind of decentralized exchange. Then you're seeing where it is that, it's decentralized for a reason. You likely will not need to go ahead and use a KY and have the KYC, as you can see right here. Decentralized applications and DEXs, you're not required to provide KYC. So you provide certain basic information, then you're like, oh yeah, okay, you're a real person. You are who you say you are. Great, And so they have to comply with different laws in terms of doing that. So there we go. And I use this example from crypto.com, which is a very popular exchange, growing massively. And so that's that from a crypto standpoint. Lastly, looking at the cryptocurrency market, we're seeing where over a 7-day period, not much change in the price of Bitcoin. Still in the 42,000, the 42,643. So for many people are asking, Hanif, what do you think is going to happen right after the ETFs get approved? And I was saying, well, you'll probably see a bounce in terms of short increase in prices, and then you'll see a sell-off. You'll see a sell-off because, again, we're still up over the past 2 months. A month or 2 months ago, Bitcoin was trading way below 42,000, and then it's actually the whole build up to this Bitcoin ETF announcement that actually caused the price to increase so much over this period of time. I'm going to bring up the chart here so you can see it, as the chart does not lie. And so from a macro perspective, still looking good in terms of this, right? This is not real estate. It's definitely not real estate, right? It's not stocks and bonds, although, that is still risky. Not so much bonds, but, stocks is a whole other different thing. Okay, let's see here. So over a month, we're just 3% down on the month. All time, we're looking at a crazy, what even is this number? Lots of digits. Green, green, green. You just want to see nice some green and a couple of digits. So going from 5 cents to 2000 and 2000 and what? 8, 9. And over the past month, we're seeing that. Let's see, in the past year. In the past year, we were at 22,900 a year ago, and now we're trading at 42,000. So you're looking at almost 100% return on whatever it is that you had in, or rather 185.69% exactly, in terms of if you had money in a year ago. So again, it's a long game. You don't want to try to, well, unless you're, experiencing what you're doing, but, try not to play the market short. You want to be in this in the long term, because if you, again, you zoom out and you look at all time, you'll realize that this trends upward long term. We're still way down from our all-time high. Our all-time high of, what is this? 69,000, 68,000, thereabout. And so we're still below. So some people will ask, is it too late to buy Bitcoin? Well, it depends on how you look at it, right? But based on previous trends and market sentiment, based on the developments, institutional money coming in, things are trending upwards for the long term is what it is that we are looking at. Looking at other coins in the market over the last 7 days, Solana is down 6%. What is this? Avalanche is down 4%. Chainlink is up 27%. Okay. Just I need to check out why exactly that is. 6%. Stellar Lumen XLM is down 6%. Mutable X is up 12%. Injective Protocol up 15%. What is this? First Digital USD. I haven't seen this. I need to check out what that is. Then you see Lido DAO is up 15%. And this is normally what I do is that each day, 5 minutes I take and I look at the top 200 coins on CoinMarketCap. As this market moves very quickly, you know, suddenly a coin is number 99, then it drops to 130, suddenly it's out of the top 200. Or, you know, like even say where on earth did this thing even come from? You look probably 2 years ago, this was not in the top 200, right? And so you realize that the top 100, top 200, it changes quite rapidly over the period of a year, 2 years, 3 years, right? And so you want to have a long-term perspective in terms of different things. Helium is down 10%. Let's see what else is double digits. Flare is up 33%. Flare has been on a roll recently. I remember when this thing wasn't even in the top 100. BitGet token up 8%. Sats down 18%. And this shitcoin is okay. By the way, I'm not cursing on live. That's an actual crypto term. If you're listening and you understand crypto, you know what I'm talking about. Beam is up 10%. That's another one. Down 10%. That's another one. Let's see. Let's some double digit. Conflux is down 14. Blur is down 12. Pith Network up 17. Pith, where did Pith come from? Pith wasn't even in the top 100 like a month ago. Pendle is up 11%. Manta is up down 26%. I'm actually not going to go into the next 100 to 200. So that's that for today, people. Rich Dad, Poor Dad, we went over overcoming obstacles. Do not be a cynic. You know, don't think too much. Analyze. If you think it's not affordable buying a property, run the numbers. Run the numbers. And if you don't understand how to do that, finding a good deal and building a team, that's where us as real estate investors come in terms of making a partnership that makes sense for everybody involved in terms of our shared ambitions. And so if that's something you are looking for, my team and I are happy to help in such a way. Or if not, you're looking for some education, lots of great education out there, right? Get educated in terms of what you are doing, what you'd like to do for the long term. So overcome your obstacles, right? Don't be a cynic. Run your numbers tightly in terms of when you're going ahead and you're looking at buying something in this market particularly, and bear in mind a long-term perspective when you are acquiring an asset in this cryptocurrency market. You're buying a home, look out for knob and tube wiring, right? Don't just go and buy, oh yeah, the income is more than the expenses. Great. There's a lot more that there is to it than that. A lot more. So, look at what it is that you are doing. Right? You're showing 12,000 to 36,000 to replace this knob and tube wiring. So you may buy, everything's good. And then suddenly this starts happening, that starts happening. And then suddenly you are in the hole in terms of your property. So with that being said, thank you for logging on, everybody. I'm going to turn off the live now, and I'm going to be only on Zoom. So see you again next week. And let me stop this recording. Actually, I should stop the live stream. The live stream stopped, and I stopped the recording. Okay, yeah, there we go. So, and that's that. Okay, I'm done then. All right. That's that. So I'm off the live now. Let me see who's on Zoom. Zoom. Cheryl and Val. Good night, Val. Good, Miss Valerie. Good night, Cheryl. Cheryl, good to see you on. You no work today? I think you're on mute. Or if you're talking, I can't hear you. Hello, Miss Valerie. You're back to school now? Hello? Unless it's my volume that's down. Can you hear me? I type in the chat. Maybe it's from my end. Da, 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 da. Hello? Hello. Let me type in the chat. Can you hear me?
Yes,
Hello?
I can hear you.
Okay. I thought it was from my end because I wasn't hearing anyone.
Okay,
Oh,
went and drink water.
okay. No worries. Yeah, the you're back to school now?
Yeah,
Oh, back to the picnic. Ah,
we were,
and how?
we were at school, but there was no kids. The teachers were there last week, but there was no kids.
So last week it was only teachers.
Yeah.
Okay. And how are things going with towards your goal for this year?
Good,
Yeah,
good.
you've been consistent.
We're consistent enough.
Nice.
We like to be on the walk on the treadmill or doing exercise in the house.
Nice. Congratulations. I'm really happy to hear that.
Thanks.
Yeah. It's like they doing things daily or weekly. It's like, you get into the rhythm of it and then it's like, okay. It becomes a part of it. So I'm really happy for you and excited for you. The
Um,
Yeah, man. And I still haven't heard back from Blue Ocean as yet. So we're just waiting the news to say, hey, we've processed your withdrawal. So that's what they're really waiting on. And then once they do that, then we take things from there. But otherwise, we just wait for them.
okay.
Mhm, mhm. Uh, any questions you wanted to ask?
Not really.
Okay. All right. Um, what else did I need to update you on? Yeah, I think that was everything. I don't know what you're like in terms of acquiring properties now. If you're still looking or you want to wait a little bit more, but we're still actively looking at buildings. So there's a triplex, smaller building that we're looking at, but this is joint venture kind of stuff in terms of splitting expertise. So I know last time we had talked about that's not exactly down your alley, but that's what we're looking at a couple of things there as well as the Airbnb. So that's what we're working on that end now.
Well, I mean, if people put in an equal amount and get an equal reward, then that I am interested in things like that, but not the other way around.
Mhm. We can talk more about it and see if it suits you, it suits you. If not, then not. So I'll set up a time and then we can talk about what that could look like, and then we'll see from there.
Okay.
Yeah, man. All right, Cheryl. Yeah, I don't know. So you can hear me, but I can't hear you. So try again, Cheryl.
Is our mic muted?
It's unmuted, but I for some reason I just can't hear. Uh, I'm not sure. Yeah. Yeah, Cheryl, I still can't hear you, but good to see you. I see you're connected to the audio. Um, so Yeah, what you can do, if you wanted to go over anything, or you can type in the chat. I'm on for another 2 minutes. You can type in the chat if you have any questions or so. Otherwise, you can give me a call on WhatsApp, as I misplaced my phone in my own house, so I can't find it. Yeah, yeah. So, so it was good. All right, sounds good. I'll call you if I need to. Sounds good. Sounds good. So glad you were able to log on. We meet same time and place every week. I went a little bit longer with the webinar portion today. Well, yeah, normally at the end we'll go over if there are investment opportunities. At the moment, there in terms of investment opportunities, there are properties that we're looking at. One, and actually maybe if I have the numbers, I'll see if I can bring it up. Otherwise, the only other thing there is in terms of from here is, let me turn this up.